Agree Realty Stock, ticker symbol ADC, a monthly dividend paying stock sitting at 4.5% dividend yield and 10 years of dividend growth. The stock is down 7.5% year to date, underperforming the S&P 500 big time. And on the 4th of May, Agree Realty Corporation presented quarter results where they slightly missed on FFO but beat on revenue by a small margin. So is this the perfect time to buy ADC stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does Agree Realty Corporation do? Agree Realty Corporation operates as a fully integrated real estate investment trust, mainly focused on the ownership, acquisition, development and management of retail properties net leased to industry-leading tenants. If we dive in the most recent earnings results, we see that ADC invested $314 million in 95 net lease properties, which is very nice. They are investing in the future. Net income per share decreased 8.6% to $0.44, which is something that I don't like, of course. But both FFO and AFFO increased a tiny bit year over year and was reported at $0.98. This easily covers the dividends, so this comforts me a lot. Payout ratio is around 74%, which is the average for REITs. And one of the more important numbers here, net debt to EBITDA, is sitting at 4.5, which is a pretty good number. However, I prefer 5 to 6.5, so there is some room left to grow the business. Agree Realty has an equity market cap of $6.1 billion. And in total more than 1900 properties within the portfolio. Grocery stores is the biggest segment with 10.5%. And next we have home improvement and tire and auto services. To me this looks really well diversified. And if we take a look at the tenant breakdown, we see that Walmart is by far the biggest tenant, sitting at 6.6%, which is not too much of course, but I would prefer a cap of 5% here. ADC invests primarily in these type of companies, omni-channel, e-commerce resistant. Next to that they focus on companies that are recession resistant and avoid private equity sponsored companies. Last but not least they focus on strong real estate and fundamentals. And it has to be said that ever since 2020 ADC is starting to pick up some momentum in terms of acquisitions, which is great, since this will grow the business in the end. In here we see some interesting stuff, but I want to focus on the credit metrics and especially on the issuer ratings, sitting at Baa1 and BBB rating, which is not too bad of course, but I would prefer A numbers here. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. Agree Realty is a 5.87 billion market cap company. And since this is a REIT, I don't want to focus on the PE ratio, but use the price to FFO instead. Right now it's sitting at 15.2, which is a decent number and indicating it's around its fair valuation. Later in this video I will show you my 3 price targets for Agree Realty, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 485 million, and in this graph we see that revenue went up really nice and steady over a longer period of time. Margins are decreasing over a longer period of time, which is something that I don't like. But I have to say, 40% is still a pretty good number. So if they can hold on to that, I'm all good. Analysis expect EPS to increase slow, but steady, which is fine by me, since EPS is less important with REITs. For the revenue though, we see interesting numbers. It's expected to see a mid-double-digit growth in the coming years, which is really nice in my opinion. Return on assets is sitting at 3.2%, which is below my 10% minimum. But for a REIT, it's looking not too bad. Return on equity is pretty okay. It's nothing too special to be honest. And the most important number, return on invested capital, is sitting at 1.9%, which is a low number, even for a REIT. It's slightly lower than the 5-year average as well, which is also a bit disappointing. Current ratio is at 0.72, which looks pretty good to me. For this type of company I prefer a number below 2. And total debt is sitting at 2 billion, and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now total cash is sitting at 11 million, so they cannot pay down a big chunk of their debt, which is something that I don't like. However, debt to EBITDA looks really good as I showed earlier in this video, so I'm not worried that much. But it's still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, do acquisitions and a lot of things. And in here we see that free cash flow is going up quite nice and steady, for a REIT, so this is something that I really like. A thing that is also very interesting about this company are the shares outstanding. It's going up in the long run. But REITs issue new shares to raise capital and grow the business, but definitely a number to keep your eye on. Next up are the dividends. Dividend yield is sitting at 4.5%, which is a great number. Annual payout is at $2.92, and keep in mind that ADC is paying a monthly dividend instead of a quarterly dividend. Payout ratio is at 74%, which is around the average for REITs, so this is looking good as well. The 5-year growth rate is at almost 7%, which is a great number for a REIT. On top of that, they grew the dividends for 10 years in a row, which is also very impressive. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. Analysis think dividends will increase at a steady and consistent pace. Overall, these dividends look pretty good to me, but how about the historical returns? I decided to compare Agree Realty Stock with the overall market, in this case the S&P 500. Next to that I added Realty Income and National Retail Properties. On the 5-year chart we see that ADC had a 45% return including dividends, versus the S&P 500 sitting at 72% return. So it's underperforming quite a bit. However, both Realty Income and NNN have lower returns. Before lockdown periods, all companies were outperforming the S&P 500 big time. However, after the big crash of 2020, things look pretty different. On the 1-year chart it is looking not so good for all these REITs. Both ADC and Realty Income have a negative return, while the S&P 500 is sitting at a 15% return. On the 6-month chart it's again ADC and Realty Income that have a negative number. And this time both the S&P 500 and NNN are beating these two stocks significantly. On the 1-month chart we see that ADC has again a negative number, and so do all the other REITs in this list. The S&P 500 is beating them once more. So bottom line, ADC and both competitors were beaten by the S&P 500. So could this mean that ADC is in the buying range right now? Well, let's check the 3 price tags that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 10%, 12% and 14%, since I think they will increase their revenue at lower numbers versus historical averages. Next to that, it is also based on the analysis expectations and the current outlook. Profit margin I'm filling in 32, 34 and 36%, and for the free cash flow margin I'm filling in 72, 74 and 76%. PE ratio isn't the best way to value a REIT, so I just put in 20. For the price and free cash flow I'm putting in 15, 16 and 17. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5, but I want a higher margin of safety with this company since it's a REIT. Right now ADC stock is at $65. I hit an analyze and we see 2 green numbers. I'm not focusing on the multiple earnings value, but only on the discounted value. We have a low price target of 61, a mid price target of 75, and we have a high price target of $93. To me, the mid price target is the most justified here, indicating it's undervalued right now. My final conclusion on this stock is that I really like the business. They are growing at a rapid but steady pace, and they might be the new Realty Income, which is of course the most famous retail out there. I think ADC will do great in the future, and this is also one of the reasons why I own this stock. Dividends are looking really good and they have this great track record. Aside from that, valuation looks pretty good, and to me, most fundamentals look good as well. Right now I'm slowly buying more shares every now and then. REITs get a lot of hits lately and are pushing down quite a bit in terms of stock price. This is also the reason why I'm not buying in big amounts. I hope the stock price will go down one more time so I can buy at lower prices, of course. For now I'm just collecting the dividends and, as I said, slowly increasing my position. And remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.